Doing the review for March 18th, 2025, and then I'll do a little bit on today. I don't usually trade on Fed days. I did take one trade today, a little bit earlier in the day, and I will go over that. But I'm just going to start out with the 18th since I didn't make a video yesterday, and then I'll just go over briefly the 19th. So basically, this day started off with three strong bear bars closing near their lows, and then went sideways for basically the last 78 bars of the day. 1 through 3, really strong, going to need a second leg. So 4 is a good sell to close bar. Odds are we're going lower and you'll be able to scale in and make money. You can see at the start of the day, we essentially had a 3-bar micro channel on bars 1, 2, and 3 on the 15-minute chart. So the 15-minute chart here was important. I thought odds were we would get at least 2 or 3 legs down from that chart, on that chart. So I was expecting 3 legs down for the bears. 5 and 6, a second leg down. 7 and 8 might need a second leg up, but it's difficult to be buying the close of 8 or be scaling in lower because you're just really trading against the regime. We're in a bear regime. We've had 2 legs down, and it looks like we're probably going to get a third leg down. So while 7 and 8, sorry, I might have said 6 and 7. While 7 and 8 are probably going to get a second leg sideways to up, odds are we're going to get a deep pullback. So a little bit more difficult to be buying this close and scaling in lower. It's usually easier to just trade with the trend. 9 and 10, it's leg 3, right? 1, pullback, 2, pullback, 3. So a little bit less certain that we get anything decent here. For the bears, odds are we're going to get at least a 2-legged pullback, which we did. 1, pullback, 2. 11 and 12, I think this is leg 1, right? I think we have 3 legs down to bar 10. And so I think 11 and 12 is leg 1. So I think it's a little bit better odds that we get a second leg up from 11 and 12 than it was from anything over here, 7 and 8. 13 and 14 could be that second leg. We might need a third leg, right? If you think about it, it's a spike and then a pullback and then a channel down. So the top of the channel is the bar 4 high. So potentially a magnet for the top of the trading range. We obviously did not end up reaching that area, but it is a potential magnet. 15 and 16 consecutive bear bars. This is probably leg 1. We had 3 legs down and then a 2-legged correction. So it's reasonable to think 15 and 16 are leg 1. Traders probably willing to sell the close of 17 or sell above 17, expecting that we get another leg sideways to down. 18, 19, 20. 18 through 20 is leg 2. I did take a trade here. I sold the 18 low during, I believe it was 20. No, I didn't. Sorry, I sold above 20, and then I sold more on the close of 22, and I held. This is a minor reversal. It's 3 legs up. I know that this is a big leg 1, pullback leg 2. If you look at the area we're in on the 15-minute chart, I'm gonna 1 second. I'm gonna pause the video for a second. All right, this is a continuous 15-minute chart, but you're still expecting we get more to the downside in this area or after this, right? So I thought it was leg 2, and we should get at least a third leg down. I also thought it was decently high probability that we get a measured move down of bars 1 through 3. So I thought we might have to get somewhere into this area. 1 through 3 has a very 90% chance of a second leg, and whenever you get 90% moves, I generally expect that they control most of the day. So I was bearish for a lot of the day. I'm just trying to see if it got like a leg 1, leg 2. It probably did. Let me just more exact. If you go from the high of 1 to the close of 3, and you put that on the 4 high. So we do get a leg 1, leg 2, and that is the exact low. Why am I using the close? It's just what it was. It could have been from the high of 1 to the low of 1, but it's generally better to use the more conservative measured move because that's the one that's most likely to get hit. So I thought we were going lower. I held short 27, 28, 29. We had not been above the moving average yet today. I did not like the strong rally to 14. I thought it was possible that we were in a trading range day, but I thought there was enough of a chance of a possible bear trend that I would just hold short. I ended up exiting on the close of 33. 30 was disappointing, a failure at that low. I'm going to, when these second legs, when we get below this bar and there's an immediate failure and a large tail, I need to be studying. That's one of the things that I've written down that I'm going to start studying more because it's definitely relevant when that happens, but I need to find a way to differentiate between a failure like this and a failure on bar 75. So maybe a failure, then the next bar is an opposite bar, something along those lines. But there's definitely relevance there. 33, a good enough. You don't usually want to buy the first bar above the moving average, but 33 broke really far above the moving average. So I thought it was reasonable. I bought the close of 33. I bought more on the close of 34, and I exited above the 34 high during 36. So where is 36 going, right? It's 2 legs up, 1, pullback 2, and it's reaching up to the bar 14 close. The reason is this is a trading range, right? Once we see this, we know it's not a bear trend. We know it's a trading range. So the bulls who bought this close and have been scaling in now think they did a reasonable thing because they know it's not a bear trend anymore. So they expect to get out. So odds were we were going to go up here. And that's why there was so much selling up in this area. It's because the bulls who bought, they were disappointed and they had to get let out. Big bar 39, might need a second leg down. It gets it, but it's just later. It's a little bit difficult. Bar 46. We do get a 2-legged pullback, 41, 42, and then 45. I think that 39 probably needed a second. You could argue 39 is leg 2, so it probably needs a third leg. 41 and 42 is leg 1, so I'd expect the second leg from that, which 45 is the second leg from that. And then we get the second leg down for the bear, or the third leg down for the bears from 46. A couple more legs up for the bulls. Thought 55 should get a second leg. I did sell the close of 55. I scaled in a little too aggressively on the close of 56, and then I ended up getting out during bar 77. So I held through this whole thing. What I should have done was been less aggressive scaling in because it's the middle of a tight trading range. We've had trading range behavior all day. So until the market shows me it's a strong bear trend, I probably should be less aggressive, and I should look to sell more at the high, expecting another leg down. Obviously, I've mentioned before, I use an 150% stop, which makes my losses really large. But the key is to, figure out ways to mitigate how often you lose, right? So the goal is to take high probability trades and not lose very much or very often. But when you lose big. You can do the opposite, the low probability trades. When you win big. I'm just talking about the specific thing that I'm trying to do right now. So I thought that we would get a second leg down. Obviously, 68 looks like leg 1. 71 is a really bad 3-bar micro channel. And that's top of the trading range, disappointing. Today, obviously a really good rally for the bulls. If we look at a 15-minute chart, this is going to get a second leg. There's some time frame, let's look at a 30-minute chart, where it's consecutive bull bars closing near their highs, right? Consecutive bull bars. So point being, I expect us to go above this high. I don't know about tomorrow, but I am expecting us to go higher. I thought 4, 5, 6, 7, 8 would probably get a second leg, meaning I thought we would get above the 8 high. The bulls who bought the high tick of 8 did a reasonable thing. Again, I'm going to go reference a 15-minute chart. Those bars were these two today. So I thought this reversal down was going to be minor. So 3-bar micro channel to bar 21. I bought the 19 high during 22, and I held until we got above the bar 8 high. So I bought here and I exited up here. Again, I thought it would get a second leg, but I also thought the channel down from 9 to 18 was rather tight. And so I thought increased chance that the bears needed something more to the downside, which is why I did not buy the close of 21, because I saw this and I thought odds were we go a little bit lower. I thought we might have to fall below the 18 low, but obviously 23 is a good looking bar. So you can buy down here. You can buy the close of 22. A little bit aggressive, obviously, to buy that close, but you can do it. This is a 3-bar micro channel on the 15-minute chart that I just showed you. So odds are it's going to get a second leg. We might have to get back to the close of 21 or the close of 18. And you can see we ended up getting back to the bar 3 high where this open gap was. The rally to 57, good enough to get a second leg. You can buy the close. You can buy close. There's not really a reason to exit. If I was holding as far as always in, this obviously ended up becoming an endless pullback with a weak, small scalper second leg on 32. I thought it was okay to be long, taking a chance that we get at least another leg up, because I thought it was 1, pullback 2, and maybe we would get a third leg. But by the time you go to 44, it's always in short. And obviously, with the announcement, it's difficult to hold trades. But I thought that the channel down from 30 to 42 was tight, but we were getting good enough reversals up, like maybe not quite 36, but 41 was a big enough bar that I thought we would go higher. But we obviously ended up getting a breakout below it. You can buy the close of 57, and like if you did and you kept buying bear closes, there's no real reason to exit until probably maybe 71 at the latest. You could exit below 70, 69, 70 should get a second leg down. It's at least 3 legs up, maybe 4. It's climactic. So you could exit below 70 or you could exit below 71. Either way, you should have done pretty well if you were buying. 4 big bear bars is going to get a second leg down, but this is also going to get a second leg up. So tomorrow, maybe it's 1, pull back, 2, pull back, and then maybe we get a third leg down tomorrow and then try to reverse back up into this area. The daily chart. So it just looks like 2 legs up to me, to be honest. 1, pull back, 2, maybe we get pull back, 3. I think we get 3 legs up. I think we have to go back down to 5,500 at some point. I don't know how high we go before, but we're definitely going to get back to 5,500 at some point. A little bit more than a 10% correction, I believe. Yeah, 10.5% correction. The weekly chart, 4 straight bear bars. Odds are you get a pullback after 4 bars down, but also odds are we get a second leg. This is one of the charts that I think it's pretty clear that we're going to get a second leg down. It's highly unlikely that we're just going to rally straight up and then that's just going to be the low and that's just how it is. I very much expect us to get down to 5,500 and potentially 5,400. I think this is the low of the trading range. Personally, I think this close is probably where the low is. This is strong enough, definitely for a second leg down. So first reversal minor. Do think we get to 5,400. I think for me personally, I might start buying stock in the S&P when we get below this low. I did buy some one of these days a little while ago, somewhere over here, and I sold it like there. Might have even been a couple days before that, somewhere over here. But I did buy a little bit of stock in the S&P, and I'm probably going to buy more when we get back down to that low. All right, that's it for this video.